just recently, it's the start of the year, so we've started the year typically with some forecasts for what's going to happen in 2026 in the world of open finance. And one of them was all about this is finally the year of commercialization. So what better opportunity to get in a room, talk to one of the best minds in financial services to just debate the topic. So Jayne-Anne, you're chair of the board at Ozone API.
Yep.
Thanks for joining. Maybe you can just introduce yourself and also maybe, what interested you about Ozone when you first got involved with our board, a couple of years ago now?
Well, first of all, thanks for having me, Huw. So my background, I'm an accountant by background. Then I went into the asset management industry, set up Virgin Money in financial services. We acquired Northern Rock and became a bank, listed that and sold it. And at that point of sale, open banking in 2018 was brand new and exciting. And so with a bunch of people that had been friends and colleagues at Virgin Money, I set up a commercial business based on open banking called Snoop. And the idea was to put people in control of their data. And I'm sure we'll talk a lot more probably about that as time goes on. And so as we sold Snoop to Vanquis Bank, I really wanted to stay part of that new and exciting future. And there you were. Growing business, exciting business, B2B rather than B2C. And I have to say for, founders out there, I think that's a really good business model. And so it felt like just the right time to use some of the experience that I'd grown up with through financial services and open banking to work with you and to, look at the next phase of open banking and regulation.
And first of all, thanks for joining us. I think it was serendipity at the time because, we were looking for someone to chair the board, and with your experience, it felt like a perfect fit. And it's been a great journey for the past couple of years. Maybe in the discussion, let's start with the UK because, as you mentioned, kind of towards the back end of your career at Virgin Money was when open banking was starting to become a reality in the UK. In fact, we've just hit the 8-year anniversary of open banking in the UK. It's interesting. If I look at it, there's some really good milestones. I mean, we're seeing billions of API calls. We're seeing 16.5 million regular users. At the same time, it's sort of been treading water for a little while. There's a lot that hasn't changed. We've been stuck in a regulatory mindset for a while, but it feels like now things are really starting to move. The open banking was positioned as very central within the national payments vision, which was fantastic to see. We've got a new entity that's being set up for building a commercial scheme around open banking payments. The FCA are taking on accountability and are just about to hopefully announce the future entity, and then the foundations are being laid for smart data. So it feels like things are about to start moving again in a big way. But take it back to, I guess, the first days of open banking. You were the CEO of a large bank in the UK.
Yeah.
How did you view it? Was this a good thing? A
Yeah.
threat? What did you think?
Well, it's interesting. So I absolutely saw it as a good thing, but let me explain why. So throughout my time at Virgin Money, there had been, and particularly post-financial crisis, there'd been a lot of talk about competition in the banking sector. And, the UK in particular, not very many banks. And as a consequence, with banks owning all of our data really as customers, the view was, is this some form of oligopoly? And how do we create more competition? And the regulators and the government, so, FCA now and PRA, as well as HMT, the Treasury, were thinking about how do we make that competition thrive so people get a better deal. And what they started with really was encouraging banks like Virgin Money and others to get out there and grow and really take on the competition. And although we all tried to do that, we discovered, not just Virgin Money, the industry, the sector, the regulators discovered it's actually really hard to break down that sort of dominance of the big banks. And the reason for that, in many ways, is that we as consumers don't like switching our bank accounts. It's painful, it's time consuming, it's boring. And actually, when you get down to the heart of it, the absolute reason that people said they didn't like switching their current accounts when I was involved was they were worried about losing their Sky Television subscription. It was, if this all takes a long time and it goes wrong, what happens? I won't be able to watch my favourite programmes anymore. And so it becomes quite a sort of visceral day-to-day thing that I feel personally. And I don't want to take the risk to move from the banks. And so as a consequence, we do have more banks in the UK, but we're still not, challenging those very big ones that we've all grown up with. And, they continue to be dominant: Lloyds, Barclays, HSBC, etc. Despite, and I'm sure we'll talk about this, the incoming banks like Revolut and Monzo. Those big banks are, the core of our banking sector. And so I think I'm right in saying, and I often give them the credit, that open banking, although it's a worldwide phenomena, really started with the thought process in the UK, which was, if we are to increase competition, if we are going to break the dominance of the big banks, how do we do that? And the thinking process was, well, hang on a second, who really does own the data? It's the data that is the most valuable thing. And, open banking started by the government, actually, rather than the regulators, saying, well, surely data belongs to the customer and the consumer. Shouldn't the consumer have access and ownership of their own data to be able to drive their own financial future, rather than the big banks sort of exploiting that data and driving it on their own behalf? And that was, I think, where the thought for open banking came from. And, I mean, you asked me, did I see it as an opportunity or a threat? Because of where I came from and where I was in that sort of ecosystem of not quite being able to break the big bank bubble, I was thrilled about it, and the new banks, I think, should be thrilled about it, because it gives you the opportunity to use some of that data that otherwise you can only acquire through encouraging people to switch. And as I've just said, that doesn't happen very often.
It's interesting. At the beginning, there was I think, a lot of talk about switching as one of the measures of success. And I think a lot of people have concluded, actually, that's probably not the right measure. It's about how these rails for secure consent-based data sharing are being used to power different things. If you look at the fastest growing banks around the world now, Revolut, you mentioned, Nubank, the Starlings and the Monzos, they're growing exceptionally well without necessarily being dependent on customers switching the account their salary goes into at the beginning. There's much more of a portfolio of how you manage your financial services now, rather than the traditional view of a primary bank. I remember in 2021 there was a very famous statement made by Anne Boden. I think it was in one of the Treasury Select Committees. Yeah. I think the question was, it was really focused around switching and has open banking been a success? And she made the point, quite rightly actually, what customers want is better service rather than just necessarily data. It was picked up at the time as a statement that says open banking's broken, open banking's a flop. I think the numbers we see now suggest that's not the case. But it was sort of suggesting this isn't about switching. This is about enabling innovation on top. I know you've commented on that in the past. I mean, what's your view? Is this about just switching, or is this something much more?
No, much more than that. And, I can remember being at a lunch hosted by, I won't say who, but a CEO of a big bank around this time, as open banking was coming in and banks were being forced, in their view, to make data available for APIs and platforms to support open banking. And this particular CEO was absolutely livid about it. That's the first thing. And I can see them now at this lunch standing up and saying, we must fight this. We're all bankers. We have to fight it. We've spent a fortune acquiring customers. And what do we actually acquire? We acquire their data, and we must keep it to ourselves. And so, let's be really clear. It's only been 8 years since open banking started. And actually, the regulators and the government have had quite a fight on their hands to change that sort of view. So that's the first thing. The second thing is that I think that the real power of open banking, to your point, Huw, is it doesn't require us to switch as customers. Yeah. Actually, we can get the benefit of both worlds. So you can have your, traditional, secure, safe banking platforms if you want it, with the big names and banks that are known to, be really solid. But at the same time, through your data with them, you can use it in a much more innovative way to either make sure that your finances are optimized or to use other platforms to do specific things that you want. And I think that is the real benefit. So I know Anne Bowden, I think she's done a brilliant thing to set up Starling. I completely disagree with her around open banking being a failure. I think we're only at the beginning of what it can achieve, and I think it can achieve a huge amount by putting customers, for the first time really, in control of the information about me that I should control for my benefit. Because for so long it's been, my data's been used by the big banks for their benefit and for their profitability. So It's an enormous switch, but it's a super important one in my view.
And you mentioned the challenge in the market dynamics at the time. I mean, I was privileged to be part of the leadership team at the open banking implementation entity. So we're seeing all of those dynamics firsthand. And the UK, I think, did create a blueprint in terms of how do you, the first market to take a very regulatory driven approach and create a very structured architecture and framework. And I think one of the things that kind of is an absolute, what this is delivering is, it's a set of pipes, it's a set of infrastructure, it's not the end proposition.
Yeah.
And you see that being adopted in different ways at different rates. So I think the areas where it had the greatest impact the most quickly, one was for businesses around how they can pull all of their information effectively into their accounting platforms and their invoicing platforms. The other's in the credit space. How you can get access to all of this data beyond just the traditional credit bureau data. I think there have been some great examples, but honestly, I think some of the biggest innovation is yet to come. One of the big challenges, the big arguments from the banks was they were having to invest a lot of money in building the capability and the infrastructure, but there wasn't a commercial overlay that created a balanced ecosystem. We're just about to move into that phase in the payment space. So a new operating scheme's been created in the UK to run a commercial scheme for open banking payments so that the banks will get paid for exposing the right APIs. I get a couple of questions, really. How do you feel about that? And do you think that lays the foundations for a real acceleration in innovation and potentially even threaten some of the more traditional payment means?
Yes. I mean, I think that the way in which the traditional system, not just payment, can be threatened by open banking, if that's the right way of looking at it, is by giving customers better service, frankly. So, in the end, I always remember somebody saying to me years ago, the financial services and the banking system's about being able to save money, borrow money and move money around. And I don't think that'll ever change. The question is, how do we do that optimally, with the best price and knowing that you're not getting ripped off? And, the fact of the matter has been that over time, big banks have taken advantage of their customers because, they've been able to increase prices, reduce prices on savings, etc. Now, with this data being exposed, whether it's through saving payment systems or more broadly, as I say, it gives other commercial institutions the opportunity to look at that data and make sure customers are getting the best outcome, which I think is really important. The reason that I don't think it should sort of destroy the big banks is they're not stupid. They are also innovative. I remember Barclays years ago saying they're going to become really a tech company that did banking rather than a big bank. And you've seen all of the big banks really invest in digitisation and improvement of capability. And I think surely they're also using the capability of customer data with customer consent to be able to give their customers better outcomes. And so I think where the real opportunity and where the real benefit even now is the new innovators have got access now to data that's super valuable, which is pushing the banks to do new things, but they will do new things. They're not going to go obsolete, they will do new things. They'll give customers better deals. And as a consequence, I think everybody wins. And that's one of the reasons I think open banking is so great. I think, used properly, not seen as a threat, seen as a way of giving customers the best possible service. And by the way, we haven't talked about how AI might come into this yet, but giving customers the best possible service, I think, is what any successful business is going to look to do that. And that's the big banks and the new banks, I think.
Yeah, and I mean, the data points to actually the biggest users of open banking are typically the biggest banks. And we see that in most markets because they have the broad customer relationships and they can do more for their customers with that access. Just going back to your journey with Snoop. You obviously saw an opportunity. It'd be great to hear a little more about kind of that vision. And did the ecosystem enable you to do what you really wanted as Snoop, or were there any barriers or challenges with what was available from an open banking perspective?
I mean, in some ways we were a bit ahead of our time, I think. And Snoop is still owned by Vanquis Bank, still doing really well. I saw it I'm not involved anymore, but I saw it in the papers only 2 or 3 weeks ago, I think. Highest savings rates, customer satisfaction very high. And so the thing that linked Virgin Money to Snoop was that at Virgin Money we had a really strong consumer ethos, which we called to make everyone better off. And the idea was that, customers came to Virgin Money and we couldn't always give them the best possible price. You couldn't compare everything and we'd always be, never knowingly undersold. But in the round and as a package, we would aim to give great customer service, really good value products across the range, etc. But we were limited by the products we had, if you see what I mean. And as a smaller bank, it was quite difficult to extend our product range. And so as a number of us moved out of Virgin Money, we were thinking, well, is there a way with new technology, new capability, without the constraints of a banking regulation, banking license, is there a way to make people better off in a different way, given our banking knowledge? And when open banking presented itself as well, through APIs, with customer consent, we can see people's financial data, help them to see where their best products are, where they're most likely to be able to save based on their spending patterns, where, they might get a better mortgage rate or whatever, then why don't we do that so that we can show them how to save and really be better off across their entire financial life? And that's worked really, really well. I mean, the challenges along the way, to your point, Huw, are, it was really difficult to put those APIs in. They were pretty clunky to start with. We were one of the first to do that, I think. And so that, I presume, has continued to be enhanced as technology and regulation has moved on. But I do think that it's particularly powerful for giving customers a better deal. And that's what the regulators and the banks, the politicians always want. How do we look after the taxpayer? How do we look after the customer?
Yeah, I heard a great analogy from, in fact, one of the team just a couple of days ago, saying kind of the historic mindset of a financial institution was you kind of build big walls. It's a big vault.
Yeah.
Super secure, but everything's locked inside. And once you're invited inside, you can access what's in there, your money and the products. In this new world, it's about moving away from big walls and it's about putting in place bridges. The APIs are bridges so that the bank can embed their products and services and the ability to move money wherever their customers are, but also use those bridges to bring in more information so they can do more within their old world. Yeah. And it really landed with me, that walls versus bridges analogy. And I think it is a completely different mindset and a different business model.
Well, and so I like the analogy. I've not heard it before. Where, you see, the reason that I think walls are important is, maybe I'm old-fashioned and I know that people think about their data slightly differently than I do, but I do think it's quite important that we have secure banking data
100%.
And secure banks, and you know what I mean? I don't want to be banking with anybody where I think that, people that I don't want can see my data, obviously, or access my accounts. One of the other brilliant things about open banking is that your data does stay with the bank. So it's a sort of read-only access, if you like. The data's not moved, but it's access so that it can be used as a sort of facilitator, but you can still be confident that that data's safe. And so, again, as I say, I think that's a win-win, really, that you've got the security of the big platform, but the nimbleness of the access that this provides.
Yeah, and that's absolutely, it's the importance of the standards and the security model that sits around it. And yeah, I'm sure we'll talk about what that looks like around the world with the different models. But maybe switch gear a bit. So we've talked about the UK and the experience. One of the biggest open banking markets, and one that hasn't been driven by regulation, is the US. So for many years, customers have been able to share their data with third-party platforms to help money management and all of these things. Very much market-driven, huge usage volumes, but without any regulation. And that's a market that's going through quite a bit of change at the minute. I mean, we've talked about it a lot, but yeah, there's been a real roller coaster over the past year and a bit. So there has been a regulation that was written into law, but with the new administration, there's been a lot of challenge around the specific regulator, the CFPB, but also the regulation, and it's in a bit of a holding pattern at the moment.
Yep.
Yet at the same time, what we've seen is a real big move in the market with JP Morgan going out and saying, if you want to connect to our APIs, you need to pay us for that service. And I think it has really changed the seriousness of the commercialization conversation. I guess question, that sort of model of charging for basic customer information, how do you feel about that? Do you think that's sustainable? Is that the right answer, or is that more of a catalyst for market discussion? What do you think?
I mean, I think it's interesting. I think I wouldn't want my bank to charge for my information because I think it's mine. On the other hand, when I saw that, I did think, well, fair enough, it does cost the bank to put in place these APIs. And we know the bigger the bank, the more complex the systems, and presumably the more expensive that is. And so to cover that particular cost to open up safely that environment, I'm sort of okay with that. I think, it drives the commercial model of other people and other innovative organisations, of course. But it does seem quite fair. And I think that fairness is important here. I think the interesting thing about open banking in the US is it feels to me, it's odd, isn't it, that, the US is leading on the world on tech, but it's actually sort of behind in terms of this use of data in financial services. And you have to think about why that is. And I suspect it's because the sort of state of the US financial services market is very different to what it is in the UK. So although there are, relatively few post-crisis, I don't know how many, but, let's call it a dozen very large banks, there are hundreds, I think, still, or certainly many tens of the smaller banks across the states, the individual states, I mean. And so, and people tend, don't they, to have still a more personal relationship with their banks. I think if you're in America, you see the banks on the high street in a way that we're seeing them much less now. So I think that there's a different relationship between the customer and the bank. It can be more local, it can be more personal. And I suspect that that's, one of the reasons that it's taken longer to take off. The banks we know have, in the same way as I described a CEO in the UK, saying this is outrageous, it's our data, how on earth, how outrageous that anybody's coming to take it from us. That has happened in the UK, in the US. And I think, Jamie Dimon's intervention is probably a way of trying to navigate that particular difficulty. If you want the data, then you have to pay us to access it. And I sort of get that. My own view is that it is only a matter of time until US customers are saying, well, hang on a second, I can now see that the making available my data in a way that's going to facilitate my life and make me better off is almost a human right. I mean, I think it's a really, really important thing that my data belongs to me. And so I think that, as I say, I think it's a bit behind in the US, but I think once it really takes off, I think it will be unstoppable. And you touched earlier on the move from open banking to open finance, so that we can look at all of our financial data in the same way we can look at banking data and make payments through open banking, make tax payments through open banking, which we can do today in the UK. I mean, that's just going to be an easy way for people to deal. So I think that being easy, open, transparent, fair and safe is something everybody's going to want.
Yeah, I agree with that. And just reflecting on some of the points you made there, I think the US is, on one hand, it's been way ahead of the world because there's been huge volumes of data sharing and actually across quite a broad spectrum. The standards cover a broad range of financial services products and tax reporting and all sorts of things. But because there hasn't been a regulatory mandate and a push, it's not been done consistently. But you're right, it's a very different market. You have huge volumes of financial services and a lot more local. I think one of the other interesting things is you have a small number of big and very powerful data access providers that almost sit in the middle. And I think one of the things that the banks and JP Morgan were doing was saying, hang on, your business exists because you're accessing our APIs and selling it on. Actually, we need to rebalance this because it is a quite unique market with such big data access players. Now, it'll be interesting to see how it evolves. My guess is the next version of the 1033 regulation will probably allow space for this charging. It feels like that's the direction. I think what'll be interesting in a number of markets, I think we might see then a level more sophistication in terms of charging for data access, because that consumer data right is entrenched in a lot of countries. And there's a level that I think regulators will say this has to be free. And then it's for banks to say, okay, well, how do I add more value around that? That might be you can access a longer period of data, or you can access it more times a day, or we'll enrich it so it's more valuable and make their money there rather than a pure data tax. So I think we'll see it evolve into a more sophisticated model. But US will be a very interesting market to watch.
Yeah, I mean, just to add to that, to sort of reinforce my thought process, which is the data, I think, belongs to the customer. I think that there'll presumably be some cases that try and work out who owns data at some point, but I don't think that I want to be part of a financial system where you can buy my personal data. That feels wrong. For me, it's sort of about the pipes. If I've got to build pipes for you to, with my consent, to access my data, then building those pipes, I think it's sort of fair to say I need to be recompensed for doing that. The second thing, which I think is true in the UK and in the US, is that this is one of the problems that we had with Snoop. Once you've accessed the data, the quality of that data is really important. And as we know, certainly those of us in the market know, and probably would shock some customers, the quality of banking data over the years has not been great. And the sort of what we used to call a single customer view is definitely not great. There'd be Jayne-Anne Gadhia data in all sorts of different places through all sorts of different banks. And to make it really effective, I think you need to be able to access all of that data, preferably in one place, preferably clean and preferably accurate. And so I think there is an overhead on banks, and indeed a sort of practical and moral requirement to look after data and make sure that it's clean and usable at all times. And I do think that I'd be prepared to pay for that for my banking and financial organisation to know that they're looking after my data properly. I think that's probably fair to say, well, we need to have some investment to make sure that's the case. But once banks have done that, and, I'm not suggesting that everybody's all over the place, because I suspect it's much better than it used to be, but probably not as good as we'd want it to be. And we want to make sure everybody continues on that journey. But once data is properly scrubbed, as it were, then the power of AI ought to be something that we can really bring in too. So you have not just open banking, but then whoever you are, the innovative institution, maybe the customer, definitely the bank, could use large language models to be able to identify where they can bring real benefits to customers. And I don't think that's even touched yet.
Yeah, I think there's some really interesting challenges to work through on that. Because, I mean, fundamentally, what open banking and open finance is doing is it's creating the pipes that allow the secure consent-based access. And there's the phrase "data's the new oil." If what it's doing is it's laying the pipes. I think what AI brings is the tools to then deliver hyper-personalized financial services.
Exactly, yes.
And financial services, I heard someone describe this really well a while ago. I can't remember who it was, but basically said, typically you can break a lot of your financial services engagements down into two categories. Stuff that's so boring you don't have to want to deal with it. Or stuff that's so complicated it's hard to get your head around. And there's definitely a huge opportunity for AI to help drive much better financial outcomes, much more hyper-personalized advice and outcomes for people. I think that's going to challenge a few things, though. One is actually, how do you evolve the consent model so that a customer can actually get an AI bot or whatever it is to operate on their behalf, and for that to have the right guardrails around it. But also, how does the regulation keep up? So I'm not sure anyone knows the answer, but I think there are some challenges to come, but the opportunity is huge.
Yes, I mean, I agree with both of those things. I mean, when I look back to when we set up Virgin Money a long time ago now, 1994, so that's more than 30 years ago, one of the things that we were aiming for was what we called industrial personalisation, industrial scale personalisation. So, how could we, and those are the days before the internet, how could we provide to multiple people individual service? And, we struggled because we didn't have the tools. I would argue that AI and open banking with great data quality gives us the tools to do that. And, when I can only talk about UK customers, but I bet it's the same everywhere. One of the things that people used to say to me as CEO of Virgin Money was that the thing people hate doing, some people hate it just because it's boring, some people hate it because they don't understand it, some people don't like managing numbers. Budgeting is something people find really hard and just don't want to get involved with. Now you imagine, the opportunity for every week you have your own personalised budget comes through. And we try to do a bit of that with Snoop. And, every Sunday at Snoop, we would send out to people an analysis of what we expected would happen in the week ahead and what their cash flow would be like. And it was by far the most loved.
I remember you telling me this. Yeah.
Because people go, great, I have never known how much cash I've got, to manage in the week ahead. And now at least I've got some sort of idea. Doing that at an industrial scale, I think, it is a real service to customers. It helps everyone.
I mean, I've been in the banking industry 30 years now, and an embarrassing personal admission, I hate, and I'm terrible at budgeting. Just understanding my own money, I'm awful at it. So I agree. Those sorts of insights, I think, can be really powerful.
And I think it has a much bigger than just the individual customer benefit, because, when you look at the savings ratio around the world at the moment, it's not sufficient. It's very low. A lot of people are managing on very low amounts of money. Cost of living is difficult. So just finding, a way to manage that, or a few quid here and there, can make a really, really big difference to people's lives.
So it's a really good point there, because one of the things that we are privileged to do is work with banks and financial institutions, but also central banks and regulators around the world as they're looking to implement open finance. And I think we're seeing an awful lot of countries really build on the learnings and leapfrog what's happened in markets like the UK and in Europe and Brazil. Just on that point there, I spent some time talking to one of the regulators in Southeast Asia, and there one of the challenges is actually just not enough people have any savings for when they can no longer work, and all of the burdens on the families. So they were seeing this as a get open finance route, right? It's a way to build longer term savings that then unlocks a much broader GDP opportunity for the whole family unit. And as I look around the world, I think we're starting to see more and more countries genuinely see this as important national digital infrastructure. I mean, India's the classic example of the India stack, where they started with digital ID that has allowed them to really tackle financial inclusion in a way we've never seen before.
And quickly and at scale.
Frighteningly quickly.
I mean, I was going to mention India because my husband's Indian, and I don't know very much about the sort of overall infrastructure there. But what I do know, and I do find astonishing, is how quickly they've been able to digitise, and as you say, and therefore improve financial inclusion across the whole country of 1 billion people.
Yeah.
And they've done that, in the last decade? And so what else is to come with open banking and more sort of push information to customers? I think it's super exciting.
And that's it. They had a really clear view of the objectives. What does it look like if you get it right? If it can give digital identity and the ability to sign to the entire population, more can open accounts. Then if you have digital account-to-account payments, you can shift away from cash, even in all of the street vendors. It's been incredible. And we're now seeing, I think, more and more countries recognise, actually done well, this becomes core digital infrastructure that drives innovation, inward investment, growth in the economy. Part of that, actually, so again, we're involved in helping implement national open finance infrastructure. So it takes the heavy lifting away from the banks and gets the whole market there much more quickly. But it looks different around the world. You've dealt with a lot of central banks and regulators around the world. Do you think there are sort of criteria for countries that are just better and faster at innovation? What's the key here, I think?
So in my experience of thinking about, as you say, central banks or companies around the world, I would say that most countries look at what other countries have done, if you see what I mean. And so certainly in my earlier days in banking, we always used to look to Australia because Australia always seemed to lead in terms of innovation in financial services and the regulatory environment, which was always interesting. I think Singapore obviously is a country that's super innovative. I see that in terms of how they manage, for example, VAT. I think I'm right in saying they're one of the first countries to invoice and account for VAT at source rather than it coming in subsequently, and that's helped with cash flow and sort of tax compliance, if you like. And so I think it's really important that we learn from those individual countries. And on balance, I would say that the difference once the individual company leaders or central banks have been clear on what they want to do is all around risk and regulation. I think personally, countries like Singapore perhaps that might be prepared to take a little bit more risk because they're a smaller country and they can test out some things. I think that's really good to keep an eye on that. I mean, you see a lot of the Middle East and obviously they are also looking to be really innovative in what they offer. And you probably want to talk a little bit about innovation there.
Yeah, it has been really interesting. And again, we're working in markets all around the world. But the Middle East has some really interesting things going on. Yeah. I mean, I think in a number of countries, there's a concerted central effort to accelerate and transform not just economies, but societies as well.
Exactly. Yeah.
Movements to reduce long-term dependency on oil revenues, movements to, I guess, open up societies, drive more inward investment, more mobility. I think certainly Saudi Arabia and the UAE, we're seeing a huge amount of interesting innovation, lots and lots of investment dollars going into Kingdom of Saudi Arabia. The UAE, there's a huge focus on, again, that phrase, national digital infrastructure. Yeah. And this isn't just open finance. The open finance space, they're doing some really interesting stuff. So it is a very broad open finance agenda with a different implementation model. So they recognize that to move faster than any other market, you have to take a lot of the heavy lifting away from all of the market players. So there's been an investment in central open finance infrastructure, which is getting the market there much more quickly. But they've also recognized it needs to have a sustainable commercial model. So what's taken the UK 8 years to just start getting a commercial scheme around open banking payments, that's there from day one in the UAE. But
because they've learned from the UK, presumably, as much as
absolutely. And actually, they looked at a lot of the market. They looked at UK, they looked at Korea, they looked at Brazil, they looked at India, did a great job of piecing together the best learnings. But this all fits within a much broader national digital innovation agenda where they are creating a lot of sovereign infrastructure. There's central bank digital currency, there's digital identity, all of the, again, similar to the India stack, all of the foundations that really create the next version of a modern economy. It's impressive to see, and I think we're about to see another 4 or 5 markets go down a similar route of central national infrastructure. But it takes quite a strong will, because there'll still be the challenge of the banks saying, oh, we're not sure if we want to do this or we can move quickly enough. So it does take, it takes kind of will and strong direction.
Which is why I think the governments and regulators need to be behind it. Because as you say, I think we can see economic benefit from it, but as a consequence, I can see real social benefit. Surely it starts to, equalise people, if that's the right way of putting it, if everybody has access to their own data. Now, they may not, have the same data. I might not have the same data as you or the same abilities as you, but at least I can see what they are, and therefore I've got an opportunity to move forwards. And, I think it's really interesting that this is something that's taking off across the world. And it's taking off in, countries like India, huge countries, Brazil, that really want to change society and improve the lot for, literally billions of people. And so I think that organisations, governments ought to see this as I say, something with social benefit as well as economic benefit. And that's why I'm so excited about it, because I think it's a world-changing opportunity, and we mustn't let that go.
Yeah, I mean, when we started the Ozone API journey, that was really, there were 2 core foundations behind the thinking. One was actually done well. This should be a really powerful force for good and growth,
exactly,
both at a societal level and an economic level. But also, this is really hard to do for the banks and financial institutions. How do we take away the headache of delivering the secure APIs? I'm personally really excited to see. So the Middle East, there's some really interesting stuff going on. I think the potential for positive impacts across Africa is enormous.
Yeah, I agree.
And Southeast Asia are a number of the markets as well, because it looks a little different there. There you have, so the financial inclusion landscape's different, but so much of the day-to-day transactional activity happens in wallets. So if you can open up that source of data and then enable that to increase access to credit, that's such an economic stimulant for markets. So I think there's a lot of really exciting stuff to come.
I agree. And, you started off actually talking about access to credit, and I completely agree that that's something that open banking can massively help, and AI, of course, but those two, the access to data there, so important. When I was starting off with the Virgin Money credit card a long time ago, what we used to refer to as automated underwriting was definitely a win-win for the bank, because it was cheaper to do the underwriting and manage the risk, and the individual because they got an answer quicker. And the more accurate data you can get, and the more organisations can access that data, first of all, the easier it is to provide credit, but secondly, the easier it is to price that risk properly. And, when I started off, risk wasn't really priced for the individual. It was priced for individual groups of people, big groups of people. And now, the ability is there through this sort of capability to price your risk compared to my risk individually. And again, I think that's really helpful.
I think one of the things countries have really been learning from previous implementations is one, the importance of setting really clear objectives. What is the national good that we're trying to achieve, and therefore how do you measure it? Because that then almost creates the stepping stones of, okay, if these are the objectives, what are the right use cases we need to enable? To enable those use cases, what are the changes, or what's the regulatory framework you need to create? And how do you take existing global best-in-class standards and make sure they work in the market? Then the implementation, it's how do you think through what infrastructure do you provide to the market versus what do you ask the market to build? And then finally, how do you build the commercial overlays on top of that so that there's a sustainable
reward,
And we're seeing, I mean, it's a conversation we have regularly with central banks, but a much clearer path for how do you think about and design this stuff, which I think is only to the to the benefit of each market. And I think, again, as we get into open finance and smart data in the UK, I think the UK will be able to benefit from following others rather than being the trail finder.
Yeah. And I think, your point about national digital infrastructure is really important, because I think countries will be needing to think about that at the highest level, and then open banking and open finance will be part of that strategy, not the whole strategy, but a really important part. But surely in the end, whenever the end is, or at the optimal point of digital, if you like, that's what all countries are going to have a national digital infrastructure. I don't know how far away that is, but it's going fast. I think we're getting there faster now than we ever have.
And there's great proof points. So we talked about India, but there are certain markets that are really getting this right, and others can look to it. So maybe almost going back to the beginning again, we started with the bank's thought process. Now, my view, and I think it's our view at Ozone API, is I think this creates a real opportunity to completely transform the bank's business model. It's no longer about the customer always having to come to the bank and only being able to access whichever products the bank has. It's more about, actually, financial services players can be more of an orchestrator of people's lives. They can provide certain products and services themselves. They can help them see their entire financial services picture, and they can embed what they do wherever their customers are. Back to the bridges analogy. Do you think banks are they getting that yet? Are they changing the business model to reflect they're operating in an open ecosystem rather than a closed vault? Or do you think they're all at slightly different places on the journey?
I think they're probably all at slightly different places. I mean, when I look back over my lifetime, banks, when I was growing up, I think, were very paternalistic. I mean, not just when I was growing up as a child, but in the beginning of my career, so we're not talking forever ago, very paternalistic. You come to me and I'll tell you what you can do and what, etc. And people sort of accepted that. And I think that, I like...
Well, you had to put your suit on to go and see the bank manager. Yeah.
Well, and Richard Branson famously didn't. And, it became part of a story that he went to see Coots for a loan in his jeans and they tried to throw him out. But, and that was a big thing to talk about, to exactly your point. So I think the culture of banking has changed in the last 30 years, definitely. But I think that what we're talking about is moving from paternalism to service. Huge difference, I think. Although I think we're making good strides. Although I did read, where did I read it? It might have been in the Sunday Times or something, that somebody had complained, I won't tell you about which insurance company, where they'd put in savings years ago, £15,000, it had turned into £45,000, and they needed it for some building work that they were having done. And they'd had to complain to the paper because this institution would not pay them their own money. And I was quite shocked to read that literally 2 days ago. And so I would say that, and of course, now that the Sunday Times have got involved, their money is being paid, etc., and we always see that. And, they're the one case that proves or disproves the rule, I guess. But I do think that we've moved a long way from paternalism. I don't think we've quite moved yet to a model of service, and I think that it's the service model that I'll be really thrilled with by the end of my career. I reckon that, the new financial services companies really think about how to serve their customers first and foremost, with data that belongs to the customer, where the bank's objective is for the customer to be better off at all times and not ripped off. That will feel like a massive cultural change over one lifetime, and I'll be thrilled with that.
And you mentioned a really important point earlier as well, that actually they don't have to build all of the products themselves now.
Yeah,
they can orchestrate and pull the right things together. I mean, a lot of my banking career, it was big focus on being the universal bank. Being able to do everything for retail, SME, corporate, and
build
the entire product suite, all built in-house. And I think, parallel I always look to is Amazon, I guess one of the biggest retailers in the world now, but way more than half of the stuff they sell isn't their own stock. They've just created this incredible marketplace where whatever you want you can find, but they'll manage certain inventory and they'll create an environment for someone else to sell the rest, and works well. And I think banks are starting to build more into their own digital channel. But I think some banks are moving faster in terms of, wanting to be, again, something I heard just this morning actually was, a few years ago, the focus was always about being the primary bank. That meant where the salary goes. But actually, maybe now it's more about being the center of a customer's orchestration. If you're the one that helps the customer manage their money, whether it's in your product or not, it's a really powerful place to be.
Yeah, really powerful. So what do I think? So I think, obviously we haven't talked enough probably about Revolut and Monzo and Starling, for example, as examples of new banks. I think they can always thought about the customer at the very heart of what they do. I think it's really important to temper that by understanding, and I'm not suggesting they don't, but, lots of fintechs in my experience have perhaps focused more on the tech than the fin, and managing a bank is a really difficult thing to do. And so we need to get this balance right between managing a safe, secure bank with a solid balance sheet and one that provides digital technology and capability to service customers, I think. And if you can get that right, I think that's super important. One of the big changes that happened to banking in, again, my career, which might have been around the year 2000, something like that, perhaps a bit later, was regulators banning charging for current accounts. Do you remember?
Yes, yeah, I do.
And of course, the reason for that was it was a massive rip-off. Banks were making an absolute fortune, and customers never really knew that until it was exposed by the media, and banks went mad because they said, how are we ever going to survive? You have to charge for current account banking. But actually, because of all of the noise and the unfairness that was sort of demonstrated through the system, I don't think many current accounts, you can't charge for a current account anymore, at least not for a very long time of banks being able to charge for current accounts. In my view, access to data will be something similar. At some point there's going to be a big push, I think, by the media, by customers or whatever, saying, you know what, it's my data and I want it to be used for me. And I suspect that at that point, that will become the tipping point where banks move from, old-fashioned paternalism to proper customer service. And as I say, the reason I'm excited by open banking is I think that this is one of the things that will encourage that tip.
And that's, again, back to a point we raised earlier. So JP Morgan's move last year, I noticed a very, very obvious shift in the industry. All of a sudden, every conversation I went to, banks and the industry were wanting to talk about commercialization. We wrote a piece just before Christmas. Personally, I think there's a very clear commercialization model for banks around the open APIs they expose. I think there will be an element that should just be free access to what might be a data right. And often that's enshrined in the regulatory framework, but certain information needs to be accessible so the customer can give consent for it to be shared to other platforms that they're using. I think beyond that, there's then three very clear models. So one is there may be areas where banks can charge. On the data side, that might be giving more access than the regulatory requirement, removing any throttles. It might be about enriching it and turning it into something that's much more valuable to the third party. Banks have got a huge amount of identity information, and their customers may trust banks to say, can you confirm I am who I say I am, without all my data being shared with another third party. It's a great business model for the banks because they have to invest a huge amount in this, but they've got a lot of data that they could turn into more valuable components that third parties would buy. There's premium APIs in the payment space as well. So money movement comes with risk, it comes with cost, and creating the right commercial models around open banking payments, which we're starting to see, I think makes it a much more sustainable channel. So I think there'll always be some free access. I think there'll be a series of paid for APIs. The bit that I think is really the key for banks is then how do they make sure the APIs they expose allow their core products and services to be embedded wherever their customer is. So we as a business use an accounting platform. Within that, there's an awful lot of logic and analysis, and our CFO is continually looking at kind of how we manage our payables, receivables. But if a bank can embed products and services, so at the exact moment a business realizes, I could do with a bit of credit for a while, they're there, it becomes a really powerful channel. And we're seeing some of the open banking standards now evolve to cover what's been called service initiation, but effectively things like account opening, origination, credit origination.
Yeah.
That's the bridges we talked about before. I think if banks get that right, there's the potential that all of a sudden this becomes the biggest sales channel. Rather than needing a customer to come to your branch or your mobile app, your products can be wherever they are. I'm just not seeing many of them do it yet. So I'm hoping this is the year we start to see that shift. We're seeing some banks ask us to implement it with them, and it's really exciting.
Yeah, I mean, I think, I'm a banker, right? And so I'm naturally on the side of the banks in some ways. And I say that because of what I'm about to say, which is let's not feel sorry for them. They make a lot of money, right? Yeah. Banks make a lot of money. There's talk all around the world, including in the UK, about bank tax, on banks' profits. And, those sort of interventions, regardless of what you think about them, I think will encourage decision makers in banks to think about different business models, whether those models can be, if you like, more fair, more balanced, more sustainable. And I suspect, to your point, as that infrastructure, as the system around banks, by necessity, I suspect changes, then I imagine we get to a point where they're looking for new profit streams. And as you say, this is a good place to do that.
Well, I think that's and it's actually fundamentally it's a distribution channel for their existing products and services if they get it right. And there are some banks who are really leading the charge in this. But I don't think it's going to be too long till this becomes much more the norm. And there's equal investment in the API channel as there is in the branch channel or their mobile app and the kind of the owned channels.
I agree. I mean, the thing is change. We absorb change, don't we? Sometimes without noticing it. When I think back, I don't know why you've just made me think about checkbooks. Have you seen a check lately? I don't think I've seen a check for years.
Thankfully, I've not used one for a very long time.
No. I mean, I've a checkbook for donkey's years.
I had a mobile butcher in the village I used to live in where you had to pay for checks.
Yeah.
But I think I wrote about 5 checks in a period of about 5 years, and it was all just to one mobile butcher.
But it used to be, a big thing. And so we've moved on from that. And I suspect that this is part of moving on again to, a new way of making payments and a new way of, growing the banking system. Yeah.
So I guess final question. It's obviously impossible to look too far forward, particularly with the amount of technological change, geopolitical change that we're going through. What would you love to see in terms of the next market evolution in the next 18 to 24 months? No further out than that.
Well, I think I'm slightly repeating myself in a sense. I think I would really like to see all of the banks taking to heart this point about making sure that customers' data is used for their benefit, whatever that means. So that means developing the payment system, I think, in that way, helping customers to manage their own financial position to optimal benefit for them, and to the extent that customers want it, making that data available to other organisations like Snoop and many others that can use that data for customers to be better off. And so I do think that we need to be in a place where in the future banks' data is, accurate, accessible, clean, relevant, and available to customers to use to improve their financial position. And I think that open banking, open finance is very much part of the way to get there.
I think that was the perfect starting and ending principle. So,
so
Jayne, thank you. I've really enjoyed the conversation, and we'll have to come back and do this again.
Great. Thank you very much, Huw.